Hello everyone. Thank you for taking the time to join today's webinar, Understanding the EU Taxonomy. A recorded version of the webinar will be available to you after the broadcast has finished. This will include a recording of the Q&A session at the end. We'd love to hear from you, so please submit your questions anytime during the webinar. You can find the Q&A panel on your screen and your questions will not be seen by any other attendees. We'll do our best to answer as many questions as we can, but if we do run out of time, we will follow up on any unanswered questions via email. As an introduction, I am Danielle and I'm a Business Development Manager here at TÜV SÜD. I am part of the Training Academy team and I've been working here for 3 years. My role involves overseeing the sales side of the Academy, accounts and any business development opportunities. So if you do have any training related questions after this webinar, please feel free to reach out to me. Today we'll be discussing EU taxonomy. Our presenter today is Aishwarya Shashi, Graduate Sustainability Consultant. Since joining TÜV SÜD, she has supported clients with corporate carbon footprint assessments and verifications, conducted life cycle assessment criteria reviews, and carried out gap analysis for a variety of sustainability certifications and standards. She's also a key contributor to the review of low carbon hydrogen projects under the UK's low carbon hydrogen standard, helping ensure that emerging clean technologies meet stringent criteria. Aishwarya's passion lies in translating complex sustainability standards into practical, actionable roadmaps that support real progress towards a low carbon future. So I'll hand things over to you, Aishwarya.
Thank you, Danielle. Good morning, everyone. I'm Aishwarya Shashi, Graduate Sustainability Consultant here at TÜV SÜD. We also have my colleague who will be the guest speaker, Wagner Lucas, who is the Sustainability Lead here at TÜV SÜD. Lucas, please introduce yourself to the audience. Thank you.
Yeah, hello, good morning. Thanks for the introduction. My name is Lucas, located at Munich, Germany, and I'm an expert for sustainability. 8 years working for TÜV SÜD right now, and I'm also a trainer for CSRD and the EU taxonomy, and I'm happy to support Aish today when it comes to the questions you may raise. So happy to see you today, and thank you.
Thank you, Lucas. Okay, let's begin with the understanding of EU taxonomy. What is it all about? So today's webinar's agenda will be Green Taxonomy Introduction, EU Taxonomy Background, EU Taxonomy Introduction, EU Taxonomy Reporting Basics, Taxonomy KPIs, and lastly, support from TÜV SÜD. Green Taxonomy Introduction. So before we dive into the EU taxonomy, let's quickly understand what a green taxonomy actually is. Green taxonomy is a science-based classification system. It helps define which economic activities are truly green or environmentally sustainable. Why does it matter? Because if a business wants access to green finance, like climate funds, green bonds, or ESG-linked loans, it needs to prove its activity is actually sustainable. And that proof comes through alignment with the taxonomy. Taxonomy acts as a common language between the businesses, governments, and investors. They reduce confusion, ensure consistency, and help prevent greenwashing. The basic structure of any taxonomy includes taxonomy objectives, list of eligible sustainability activities, screening criteria, and beyond environmental objectives, taxonomy also includes social safeguards so that sustainability does not come at the cost of people or communities. The road to net zero. So we all know about the Paris Climate Agreement and the global push toward the net zero emissions. But getting there isn't exactly straightforward. One key principle is that only when the incoming money is green can the outgoing impact be green. That's where taxonomies come in. Companies, regulators, and financial market actors like investors, lenders, and insurers use taxonomies to make informed decisions on sustainable investments, which can help them achieve net zero or decarbonization goals. Taxonomy acts as a tool to help companies align with the sustainability reporting frameworks such as CSRD, SFDR, etc., together helping them achieve net zero goals. Now let's understand the global adoption of green taxonomies. Every country is drawing their own taxonomy, but all of them need to lead us to the same destination, net zero. And that's where the EU comes in. It was the first to formally adopt a green taxonomy, setting a kind of global benchmark. As of now, if you see the global representation, the green dots represent the countries which have already adopted taxonomies. Of course, it's the EU, and other than that EU, it's Russia, China, Mexico, Colombia, Kazakhstan, Japan, and so on. So the orange dots represents the countries which are still under development or in the planning phase. For example, Australia, Chile, Peru, Argentina, Dominican Republic, India, Saudi, and so on. So there are countries where we can still see limited efforts, for instance, Canada, South Korea, and Kenya. And coming to the USA, it's still not given a thought of adopting any taxonomy. And UK is planning to work around the green taxonomy for the timeline of 2026. Efforts are underway to bring consistency across taxonomies through initiatives such as IPSF, Common Ground Taxonomy, co-developed by experts of EU and China. These countries are working to align their green taxonomies, which aim to reduce fragmentation and facilitate comparability between taxonomies so that the cross-border investment becomes more smoother. So now let's take a closer look at what EU did, how it structured its taxonomy. So why EU brought taxonomy into force? In the last few years, the European Commission has proposed several regulations as part of the EU Green Deal and EU's Action Plan for Sustainable Finance. The EU taxonomy, of course, helps combating greenwashing by providing a science-based, transparent, and harmonized classification system for screening sustainable activities. It supports the EU Green Deal's ambition for climate neutrality by 2050 and is a key tool under the EU Action Plan on financing sustainable growth aimed at directing both public and private investments towards genuinely sustainable activities. Prior to the taxonomy, there was no unified definition or harmonized standard across the EU member states to define what qualifies as sustainable. These factors collectively make the EU taxonomy a central pillar of the sustainable finance agenda. Let us understand key facts from the taxonomy history. Companies are increasingly using the taxonomy to guide and showcase their taxonomy-aligned capital investments in key sectors to meet the EU Green Deal targets. Over 249 billion euros was reported so far in May 2024. For the financial years 2022 and 2023, as of 26 May 2024, companies located in Germany have reported the highest taxonomy-aligned investments, about 114 billion euros. Utility sector lead with 132 billion euro investment, having more than 60% of alignment, followed by consumer discretionary, industrials, and energy. In 2023, 90% of the green bonds issued by EU public actors reference the taxonomy to illustrate their commitment of using the raised funds for green projects. Banks are started to use taxonomy in their lending strategies and in their assessment of companies' investment plans. Mortgages and other loans to activities in the scope of taxonomy represent on an average over 50% of assets of large EU banks based on the first year figures. Here we discuss about the interrelationship between the taxonomy and other sustainable finance reporting frameworks. The EU taxonomy provides a classification system for sustainable economic activities that is applied within the scope of Corporate Sustainability Reporting Directive and the Sustainable Finance Disclosure Regulation. The CSRD replaces NFRD and requires companies to disclose how their turnover, CapEx, OpEx align with the EU taxonomy. CSRD is relevant for the SFDR as it provides part of the information to be disclosed for the SFDR report. Companies affected by the SFDR as in turn needs the EU taxonomy metrics from the CSRD report of their investment objects to fulfill their reporting obligations. EU Green Bond Standard requires that more than 85% of net proceeds are allocated to EU taxonomy-aligned activities. Benchmark regulation, that is EU BMR, use taxonomy criteria to select green assets and issuers. MIFID2 or IDD, which are Sustainability Preferences Amendments, requires financial advisors and insurance distributors to integrate clients' preferences for taxonomy-aligned investments. Corporate Sustainability Due Diligence Directive does not mandate taxonomy reporting, but encourages alignment with the taxonomy criteria for assessing supply chain sustainability and environmental impact mitigation. This slide explains the events related to reporting, which began from the Paris Agreement back in 2015, followed by the Non-Financial Reporting Directive, which came into force in 2016. EU Sustainable Finance Action Plan, the EU Green Deal, and the SFDR was all published in 2018, followed by the guidelines on NFRD reported in 2019. The EU Taxonomy was published in 2020, followed by the Taxonomy Delegated Act and Disclosure Delegated Act was adopted in 2021. CSRD, which will eventually replace NFRD, came into force in 2022, and also Complementary Climate Delegated Act to include nuclear and natural gas activities under the EU taxonomy. In 2023, Taxonomy Environmental Delegated Acts for non-climate objectives were adopted. And in 2024, first set of environmental sustainability reporting standard under CSRD framework was published. And in this year, that is nearly in February 2025, Omnibus package was proposed, which introduced several changes and requirements under various sustainability reporting frameworks, which I will be going to explain at the end of this webinar. Let's begin with the EU taxonomy regulation. What is the EU taxonomy regulation? The EU taxonomy allows financial and non-financial companies to be measured on a same scale, that is, share a common definition of economic activities that can be considered environmentally sustainable. Here you can see the clips of how different regulations look like. First one is the main regulation, followed by the Climate Delegated Acts, followed by the Disclosure Delegated Act, and lastly, Environmental Delegated Act. And here it's the overall representation of all the delegated regulations supporting the main regulation of EU taxonomy. This will help to navigate required delegated acts while doing the EU taxonomy reporting. First one is the Climate Delegated Act, which was launched in 2021, which brings list of eligible activities and technical screening criteria for climate objectives, that is climate change mitigation and climate change adaptation. It consists of 2 annexes. And then Disclosure Delegated Act was published in 2021, which consists of disclosure of KPIs for financial and non-financial companies according to the Article 8 of the EU Taxonomy Regulation. It contains Annex 1 to 11, where 1 and 2 represents KPIs for non-financial undertakings, and remaining annexes gives information on the financial KPIs. Next is the Complementary Climate Delegated Act, which is a non-legislative act, which came into force in 2022. This adds nuclear energy and natural gas as transitional activities under the strict conditions under climate change objectives, and it's a standalone document. And then in 2023, amending of Climate Delegated Act, which amends and updates the list of eligible activities and technical screening criteria for climate objectives, which was established in 2021. Again, it contains 2 annexes. And lastly, it's the Environmental Delegated Act, which came into force in 2023. So this document contains list of eligible activities under the remaining 4 environmental objectives and technical screening criteria for water, circular economy, pollution prevention, biodiversity. And also it contains updates or amendments regarding the disclosure guidance, which was launched in 2021. So it contains annex from 1 to 9, where 1 to 4 is the technical screening criteria for the 4 environmental objectives, and remaining annexes are changes or updates made to the Disclosure Delegated Act. So now we will understand who has to report. I'm going to explain the current requirements, that is before the formal adoption of the omnibus proposal. So if you are in the scope of CSRD, which is previously NFRD, you're also in the scope of EU taxonomy. CSRD introduces a phased expansion that eventually include large non-listed companies, listed SMEs, and non-EU groups operating in the EU. The double materiality principle applies under the CSRD, and EU taxonomy alignment must be disclosed using KPIs. Until 2024, that is for financial year 2023, reported in 2024, there was full disclosure requirements only for first 2 climate objectives and simplified disclosure for the remaining 4 environmental objectives. But from 2025, that is for financial year 2024, reported in 2025, full disclosure requirements are mandatory for all the 6 environmental objectives. And we can see different criteria under each phases, and these requirements are currently subjected to change after formal adoption of omnibus. So I will explain these potential changes at the end of the webinar, along with how the future of the taxonomy might look like. Now, conditions for economic activities. Till now, we were talking about the technical screening criteria, objectives, etc. What are they all about? It's very simple. It's just like when you want to get hired by a company, you need to go through multiple interview rounds to get selected. Similarly, activities of the company should undergo these 4 conditions to get selected for sustainable investment. Taxonomy regulation set out 4 overarching conditions that an economic activity must meet in order to be taxonomy aligned. Technical screening criteria is for determining under which an economic activity qualifies as contributing substantially to at least 1 of 6 environmental objectives, and at the same time do no significant harm to the remaining 5 environmental objectives. And also, the activity should fulfill minimum social safeguard to be taxonomy aligned. Now let us learn about the taxonomy reporting. Before understanding the steps involved in taxonomy reporting, let's understand what are the 6 environmental objectives we were speaking about since the beginning. So Article 9 of the taxonomy regulation sets out 6 climate and environmental objectives. They are climate change mitigation, climate change adaptation, sustainable use of water and marine resources, circular economy, pollution prevention, and healthy ecosystem. The first 2 objectives are referred to as climate objectives because it's related to climate change and climate change adaptation. Remaining 4 are non-climate objectives. Article 10 to 15 sets out guidance for each economic activity that can be classified according to the 6 environmental objectives. Technical screening criteria set out in the Taxonomy Delegated Act helps to screen the economic activity according to the substantial contribution to each objective. What are the steps followed in taxonomy reporting? The first step is to identify economic activities and then assign the NACE code. Once the activities are being assigned with the NACE code, it has to be compared with the taxonomy activity code in the Taxonomy Delegated Act. Once the economic activities are identified, then it has to go through the technical screening criteria. So the technical screening criteria is nothing but it includes both quantitative and qualitative benchmarks that eligible activities must meet to demonstrate that they make substantial contribution to an environmental objective and do no significant harm to the remaining 5 objectives. And also check the compliance with the minimum social safeguard. Once the technical screening criteria and minimum social safeguard is passed, the next step is the collection of data for the calculation of taxonomy KPIs in the company for taxonomy aligned activities. Then is determining the taxonomy KPIs. And once the KPIs are being determined, reporting has to be done using the reporting templates from the Disclosure Delegated Act and also disclose other mandatory information of the EU taxonomy. So before you start to disclose your company KPIs, we should know that the distinction, as it is very critical to show how much of your economic activity are on a pathway to alignment with the EU taxonomy, how much is not aligned, how much is eligible but not aligned, and so on. So if you are reporting under the CSRD, this becomes even more important due to the tighter requirements and cross-references with ESRS. So the activity, whether it's financial or non-financial, they have to report their respective KPIs at project level by calculating the compliance of investments. So the first step is to check the taxonomy eligibility. Is your economic activity listed in the Delegated Act annexes under any of the 6 environmental objectives? If it is yes, then the technical screening criteria applies. If it is not, then it's not eligible and percentage of not eligible KPIs has to be reported. Next, does it contribute substantially to at least 1 out of 6 environmental objectives? If it is yes, it goes to the next step of technical screening criteria. If it is not, then it's not aligned. You have to report percentage of eligible KPIs and percentage of eligible but not aligned KPIs. Next, does the activity meet the DNSH criteria for the other 5 objectives? If it's yes, then only it qualifies for the next step. If it's not, then it's not aligned. And again, we have to report percentage of eligible KPIs and percentage of eligible but not aligned KPIs. Next step after the technical screening criteria is does the activity comply with minimum social safeguard? If it's yes, then only it's known to be taxonomy aligned, or else it's not aligned. And again, percentage of eligible KPIs and percentage of eligible but not aligned KPIs have to be reported. This completes taxonomy alignment pre-disclosure review process. Now I'll go in detail about the technical screening criteria. Once you all know all the eligible activities of the company and passes the eligibility filter, it enters the alignment filter, because eligibility alone does not mean the activity is sustainable. So to be taxonomy aligned, it has to go through the technical screening criteria, which includes combination of substantial contribution and do no significant harm, and then also comply with minimum social safeguard. This makes the activities taxonomy aligned, and then it moves to the reporting of KPIs, that is percentage of turnover, CAPEX or OPEX, so on, which I will be explaining in the coming slides. Now we will understand about types of economic activities. As I explained in the previous slide, how the technical screening criteria is applied after checking the taxonomy eligibility, there is an additional step to be followed. So once the taxonomy eligible activity is identified, it is very essential to identify if the eligible activity is direct, enabling, or transitional. So direct economic activity are the activities which directly substantially contribute to any of the 6 environmental objectives, which are the low carbon or green activities like solar, wind, etc. And enabling activities are the activities that indirectly enable other activities to reduce emissions, example, EV batteries, smart meters, etc. And addition to that, there is something called transitional activities. Due to the strong political push from France for nuclear and Germany for natural gas, the EU Commission recognized nuclear and gas technologies as transitional activities if they meet sectoral benchmark under strict conditions under the climate change objectives. So this came into force through the Complementary Climate Delegated Act, which was published in 2022. So why this is important? It's very important because percentage of transitional and enabling aligned or eligible activity KPIs has to be reported. So what happens when the technical screening criteria that are not applicable or not relevant? There are some instances where technical screening criteria might not be relevant or not applicable for that particular economic activity. For instance, maintenance only service with no construction related waste. Still, it is possible to prove taxonomy alignment without the technical screening criteria, but with a strong justification while disclosing the taxonomy. And this explains about the do no significant harm criteria. It's nothing but avoidance of significant adverse effects. So here there is an example where an eligible economic activity X substantially contribute to one objective, that is climate change adaptation. So that means this economic activity X should not adversely affect the remaining 5 objectives, that is climate change mitigation, sustainable use of water and marine resources, circular economy, pollution prevention, and healthy ecosystem. So the DNSH criteria might be specific or generic. Generic in the sense the DNSH criteria might be general for several economic activities, and it might be tailored to a specific economic activity and have direct consequences only for the activity, depending on the nature of its operation. Now let's understand what is minimum social safeguard, also shortly called as minimum safeguard. Article 18 of the EU Taxonomy Regulation explains about the minimum social safeguard. The key frameworks referenced while reporting are OECD guidelines for multinational enterprises, UN guiding principles on business and human rights, ILO core conventions, which has 8 fundamental rights at work, International Bill of Human Rights. What are the key focus areas for compliance? It is human rights, anti-bribery and corruption, taxation, fair competition. And the guidance document, that is the final report on minimum safeguards by EU platform on sustainable finance, helps companies to report the compliance with the minimum social safeguard. And it's applicable to any economic activity seeking taxonomy alignment. How is the minimum safeguard compliance assessed? Currently, there is no uniform EU-level audit or verification process for the minimum social safeguard compliance yet. So currently, companies are expected to conduct due diligence, report policies, procedures, and grievances mechanisms, have no history of violation or court convictions related to 4 key areas, which I explained in the previous slide, align with the existing frameworks like CSRD and CSDDD. In practice, companies can provide self-declaration and show support by existing sustainability or ESG disclosures. However, third-party assessment is always recommended to check the compliance for trust and resilience. Now let's understand with the practical example if your activity is aligned or just eligible. So we are taking an example of an XYZ company limited, which generates electricity via wind energy. So this is the main economic activity. NACE code is being assigned, that is D35.11 for production of electricity via wind, solar, hydropower, and so on. And now the next step is to identify the EU taxonomy activity code. So it is 4.3, electricity generation from wind power from the Taxonomy Delegated Act annexes. Now we know that the activity is listed and it is taxonomy eligible. Now the technical screening criteria has to be applied. So for the substantial contribution, the climate change mitigation, the activity generates electricity from wind power, it does qualify, but for the particular example which I have taken, the wind power electricity generation from wind power is also listed under climate change adaptation. So under the EU taxonomy, an activity may contribute to more than one environmental objective, but for reporting purpose, you must select only one substantial contribution objective per activity. Why? The EU taxonomy reporting uses KPI reporting, which is linked to each economic activity per environmental objective. So if you report same KPIs under both climate change adaptation and climate change mitigation, it would result in double counting. So probably the wind projects are considered as climate change mitigation, and it qualifies a substantial contribution for climate change mitigation. And next is to check the do no significant harm criteria. So each objective has criteria which it has to be cleared. And in this case, we can see that the pollution prevention and control is not applicable for the wind project. Wind project is the wind power generation. Once all these criteria have been met, it is then allowed to go to the next step, that is minimum social safeguard compliance. So this is how we can check if the activity is just eligible or aligned. What happens if your activity is not listed in the taxonomy? From the previous example reference, XYZ Company Limited, it has two economic activities, for instance. So it's generating wind power, 60% of its operations, and trading of electricity for remaining 40%. As we already know from the previous example, it has the NACE code, activity code, it is eligible, and technical screening criteria can be applied. But in case of trade of electricity, the NACE code D3.14 do not have taxonomy activity code in the Taxonomy Delegated Act annexes. So it means it's not applicable and not eligible, and its technical screening criteria cannot be applied. So it's important to report 40% of not eligible KPIs. Since it's not listed, that does not mean the activity is not green. It's simply that it is green but still not eligible under the EU taxonomy reporting because it's still under development. Now let us understand the taxonomy KPIs. Annexes in the Disclosure Delegated Act gives information on what KPIs should be calculated, methodology, and templates to report the KPIs. There are KPIs, different KPIs for non-financial corporates and financial institutions because their businesses, model, activity, and roles in the company are fundamentally different. Here is why. Non-financial corporates, example manufacturers, retailers, engage in producing goods or delivering services. Their environmental impacts comes directly from their operations, example energy use, raw materials, production process, etc. So KPIs can be reported in form of turnover, CapEx, and OpEx. Whereas for financial institutions, example banks, asset managers, do not produce physical goods. Instead, they facilitate capital flows, investments, and insurance. Their sustainability impact comes from where and how they allocate capital, what they finance, and how they manage assets. KPIs are therefore tailored to measure the share of environmentally sustainable investment, loans, or underwriting activities. So we can see that for banks, the KPI is measured in terms of turnover and CapEx-based green asset ratio. For asset managers, it's turnover and CapEx-based percentage of taxonomy-aligned investments. And for investment firms, it is that turnover and CapEx-based percentage of taxonomy-aligned investment and optional aligned fees and commissions. And for insurance companies, especially for life insurance, it's different, and non-life insurance, it's different. For life insurance, it's very similar to asset managers. The KPI is based on the turnover and CapEx-based percentage of taxonomy-aligned investment. And for non-financial insurance, it is based on aligned premiums or revenue. And also, it's very important to include the percentage of enabling and transitional. Why? Because under each KPI, the taxonomy requires to represent percentage of eligible economic activity, which is enabling and which is transitional. So now let's understand the methods to calculate each KPI under non-financial corporates. So the turnover KPI is calculated using turnover from taxonomy eligible or aligned activities divided by the total turnover. And for CAPEX and OPEX, the aligned amount of CAPEX or OPEX is divided by total CAPEX or OPEX. What do we understand by the term CAPEX and OPEX? So CAPEX is the total investments in the tangible and intangible assets during the financial year, considered before depreciation, amortization, and any remeasurements associated with the taxonomy eligible activities. And OPEX is all the which is not capital cost, it's the non-capitalized costs which relate to the investment in assets and processes. Now let's understand what financial products fall within the scope of taxonomy. So firstly, it's the pensions and asset management, which includes UCITS funds, alternative investment funds, portfolio management, pensions, so on. And under insurances, insurance-based investment products. And under corporate banking and investment banking, it has securitization fund, venture capital and private equity funds, portfolio management, index funds. Let us also learn about green asset ratio. So GAR, which is the green asset ratio, is used where standard operational revenue or CAPEX or OPEX based KPIs used for non-financial corporates are not feasible due to the nature of financial institutions' balance sheets. So it applies to the credit institutions like banks under the NFRD or now called CSRD. It covers non-sovereign exposures, especially like loans, debt or equity securities, real estate. It does not include any sovereign exposures, central banks, trading book derivatives, non-EU clients unless the data is available. Full alignment disclosures are mandatory now. GAR poses challenges for data collection, small enterprises coverage, non-EU alignment, and real estate classification. But it also benefits by promoting transparency, enabling green finance, and supporting EU climate goals. Now let us understand the formulas behind financial institution KPIs. So first is for banks, which is calculated based on the turnover and CAPEX green asset ratio. So the green asset ratio is calculated firstly based on the turnover, that is taxonomy eligible or aligned assets, divided by total covered assets. CAPEX-based GAR is calculated based on the taxonomy aligned CAPEX assets from non-financial corporates divided by total CAPEX assets from the non-financial corporates. For asset managers or life insurance, it's based on the turnover and CAPEX, where investment in taxonomy eligible or aligned activities is divided by total covered investment. Similarly, CAPEX aligned investment divided by total covered investment. For the investment firms, it's divided into two types. One, when it's held on its own account, and second, if it's not dealing with its own account. If it's not held on own account, then it's calculated based on the turnover, where taxonomy aligned exposures to corporates are divided by total eligible exposures, excluding the sovereign central banks derivatives. If dealing with the own account, then it's calculated based on the GAR. So taxonomy aligned assets are divided by total covered assets. Non-life insurance is calculating the KPIs based on the premiums. So gross premiums or revenue from taxonomy aligned underwriting is divided by total gross written premiums. So here we can see covered assets, covered investments, covered exposure. What do they mean? It simply means that any asset, investment, or exposure which falls within the scope of EU taxonomy disclosure. So what's next? EU social taxonomy is under development to identify socially sustainable economic activities. So there is something known as EU social taxonomy, which is bringing the list of eligible activities in the social sector, having technical screening criteria for the social eligible activities, which is very similar to the technical screening criteria for the existing environmental objective. And it is still under development. We don't know about the formal adoption of it yet. And as I promised in the beginning, now I'm going to explain the changes brought through the omnibus proposal. First is rationalizing reporting obligations. So the proposal limits mandatory EU taxonomy reporting to the large companies aligned with the scope of CSDDD, allows voluntary reporting for other large companies within the future scope of CSRD. Next is refining scope and applicability. Introduce the option to report on partially aligned activities to support gradual environmental transition. Enhance clarity on technical screening criteria. So introduces a financial materiality threshold for taxonomy reporting. And next is streamlined reporting formats. So the proposal promises to reduce the number of reporting templates by approximately 70%, also simplify complex DNSH criteria, especially those related to pollution prevention objective involving chemicals. And lastly, pragmatic implications for stakeholders, for companies, financial institutions, investors, and policymakers. So the proposal plans to adjust the green asset ratio for banks by allowing them to exclude exposures to companies outside the CSRD scope, that is less than 1,000 employees and 50 million euro turnover. So these changes are proposals and are subjected to be approved by the European Parliament and the Council, and the member states must transpose these changes into their national law within the given deadline. So how can TÜV support companies? Often companies faces challenges because the EU taxonomy regulation presents significant complexity due to its comprehensive scope and detailed requirements. Ambiguities exist in the precise allocation of economic activities that substantially contribute to environmental objective. Compliance demands navigating numerous intricate technical screening criteria and rigorous performance threshold. Challenges persist in ensuring the accuracy, completeness, and reliability of reported data and disclosures. So how can TÜV support companies? So we can provide various services starting from the consolidation and quality assurance, plausibility check, verification and gap analysis, and verification and testing. So what are your benefits? Fulfill the requirements of EU taxonomy, master challenges and understand complexity, plausibility check of your economic activities, robust basis for investors. Along with these services, we are also offering training courses through TÜV Academy on EU taxonomy. Please visit our website and follow us on LinkedIn for more updates. Please let me know if you have any questions in the chat. Thank you for everyone for participating in today's webinar.
Yeah, so I can see there are some questions.
Fantastic.
And I will just, oh, sorry.
No, sorry, Lucas, I was just going to say passing over to you, so carry on.
Thank you. Yes, as I just said, there are some questions and I will just read them out loud, and I will also try to provide the answer accordingly. So the first question is, how exactly does the EU taxonomy determine whether an activity is considered environmentally sustainable? Is it purely based on emissions thresholds, or are there other criteria? So this is a question really focusing on climate change. Yeah, I think you all saw that there are several tests you should use in order to determine whether an activity is sustainable or not. So first of all, the activity must make a substantial contribution to at least one of the 6 environmental objectives. And further, it must do no significant harm to the other 5 remaining objectives. And then there are still the minimum social safeguards. And also you need to provide evidence that you also fulfill those. And yeah, for some activities, there are emission thresholds as part of the technical screening criteria, but not for all. And here, these thresholds are defined, but there are further parameters like resource efficiency, waste management, biodiversity, and so on that need to be considered, of course. So I hope this answers the question. So the second question we received is what's the difference between eligible and aligned activities under the EU taxonomy, and why does that distinction matter for reporting? Yeah, so as you heard by Aish, eligible means that the activity is covered by the EU taxonomy framework, so it's really listed in the delegated acts, and it has criteria published for it accordingly. And aligned means that these criteria are really met. So these criteria are fulfilled by the activity you're dealing with. And the difference matters because under disclosure rules, you need to report both eligibility and also alignment separately. And a high eligibility percentage without alignment can signal a gap in sustainability performance. Yeah. So that's the difference between eligible and aligned activities. Then there is another question. Is there any guidance on the measurement of technical screening criteria, e.g. CO2 losses from a CCS project? So there is not that much guidance. So what we can tell you is that there is the EU Taxonomy Navigator published by the European Commission. So when you type in EU Taxonomy Navigator, there are Q&As that might also support your question regarding carbon capture and storage. Within the taxonomy itself, sometimes there are like hints or advices where you can find more information. When it comes to CO2 emissions, there's always the link to ISO 14064 or 14067 and Greenhouse Gas Protocol. So that describes how you can calculate carbon emissions, but specifically CO2 losses from carbon capture and storage projects, I'm not sure whether there is some advice given in the taxonomy, but I think there's none. So that's then up to you or the company how they calculate those losses. But it's important to stick to calculation measures that are provided by Greenhouse Gas Protocol or also by the ISO I just mentioned. Then another question, wait a second. As an SME, so SME is small and medium enterprise with ICP to install high voltage electricity networks. I saw then we would have to report in 2027 in our work with solar farms and EV chargers. Yeah, so when talking about electricity networks or grids, it's always important to consider the assets that are connected to those networks. So also solar farms, EV chargers, wind farms, and so on need to be considered, and it needs to be considered how the electricity is produced. So the assets I just mentioned, like PV, wind, and so on, also need to fulfill taxonomy requirements in order that the network transporting then the electricity can be sustainable. So there are explicitly, or there are very specific criteria and requirements that need to be fulfilled when it comes to electricity grids in order to have an aligned grid. And yeah, the year 2027 you just raised, it depends on your company size. So as we just heard, this new omnibus procedure makes the taxonomy relevant for the most companies starting with 2027. That's right. But for huge companies, huge utilities, it's already an obligation to comply with the taxonomy right now. So in 2025 for 2024. That's the wave one, we say. The next question is the following. Is taxonomy also required for engineering, manufacturing, and services companies? Yeah, so the taxonomy is relevant for all companies that meet the requirements or that exceed the thresholds. So right now it's without taking into consideration the omnibus changes. So it's 250 employees or more. It's more than 50 million euros of turnover or 25 million euros of balance. So all companies, and it does not play a role what they are producing, are or need to consider the taxonomy, but there are only a few products listed that are taxonomy eligible. Yeah, so for example, steel, hydrogen, cement, and when your company does not produce one of the listed products, so if you do not have an eligible product, then you cannot report that it's eligible or aligned. Then you need to report that that it does not fulfill the criteria. When it comes to services, also those are listed in the taxonomy. But for example, consultancy services are not really a part of the taxonomy. So in some cases, consultancy, especially when it comes to new build, so new build of houses, are listed, are eligible, but services on a general level, so consultancy services are not really eligible and thus cannot be reported as eligible and aligned. Next question is how new taxonomy helps SMEs. So I don't know what you mean with new taxonomy. So maybe you mean the the omnibus changes, because the taxonomy itself is not that new. So it was established in 2020 already. But when you talk about the new taxonomy, so at least the criteria will be less. So there will be less DNSH criteria, or it will be also possible to have an aligned service or an aligned product without fulfilling each and every single DNSH criteria, for example. So it will be easier to comply with taxonomy and will be easier to reach a higher number of alignment. But it doesn't really specifically help SMEs. So when you are an SME, you do not have to fulfill the taxonomy because, as I just said, the criteria, the thresholds, when you have to report about taxonomy or to comply with taxonomy, is more than 250 employees. So this automatically says SMEs are not relevant when it comes to taxonomy, because SME do have less than 250 employee or less than 50 million of turnover or 25 million of balance. And these thresholds will change according to the omnibus proposal, and they will become higher. So it's even more difficult, or it's easier to not have to comply with the taxonomy. And then there's the last question. Oh, I'm sorry.
Yep, one more question. I was just going to say we've got time for one more. Sorry to interrupt.
Okay, thank you. Is taxonomy, sorry, this was the wrong one. Is there any public checklist for minimum safeguards to verify against? Yeah. So Aish just showed you the report on minimum safeguards published by the EU Commission. And there in the annex, there is a checklist provided what needs to be fulfilled and how it can be fulfilled. So when you search for this report of minimum safeguards, you will find in the annex of this document a really small or short checklist, which will help you to fulfill the requirements. Yeah, I hope these answers help you guys, and thanks for listening.
Thank you, Lucas, and thank you, Aishwarya. And thanks again to everyone for joining us. As mentioned earlier, we'll be sending you the on-demand version of the webinar after the event has finished. For attending the event, you will have a 10% off code for TÜV Academy training courses, and this discount code is webinar_10. This can be used on any of our courses, including our EU Taxonomy training course we have scheduled to be delivered virtually on the 16th of September. Keep your eyes peeled for other webinars about this topic, which you'll find on the resource section on our website, www.tufsud.com/en-gb. Please get in touch as well and let us know if there's any other webinar subjects you'd like us to cover. It's great to hear exactly what you're interested in hearing about. Feel free to get in touch with me via the email on screen or send any inquiries to info.uk@tufsud.com. On behalf of myself, Aishwarya and Lucas and everyone at TÜV thank you for taking the time today to join our webinar. Enjoy the rest of your day. Thanks.